my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This is all my own original work and I think you deserve to have that. So with that, LME 3-month nickel. Okay, so let me just remind you once more, as I've done for many times, and it's a very timely reminder given what's happened in recent times. As I've said here repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to lows of late November 23, plus the lows in 24, and also suppose the congestion this year in January, February, late April, May, early June, and the high 18 weeks ago, plus the recent moves higher 11, 9, 8, and 5 weeks ago. In recent months, this has added up to a test and halt, more or less, the gold long moving average, which is currently at 15,390. In addition to these, for many months, I also highlighted how the higher 15,840 level, along with the low for 2021 at 15,665, was and is also still a key level. Please continue to bear these levels in mind, however lower we venture. Okay, so 3 weeks ago, I said, and I quote, "Close to the current market, another feature to watch out for is the 50% Fibonacci line for 2025 at 15,325. Earlier stabilization over this 50% Fibonacci line had placed the gold long moving average under direct threat. However, we have since pulled back lower and it's worth now looking lower. First at the September low at 15,055, as if we exceed that on the downside, and we still might, well, this month of October will be set up to become a possible monthly key reversal, with all the implications that may have. Then after that, also keep an eye on the November 2020 low down at 14,935, and that's the end of the quote. Well, there's a lot to unpack there. First off, we did not manage to make a monthly key reversal down in October, but the threat was there and prices duly obliged in early November, pushing lower, holding Wednesday and Thursday last week ahead of the 14,935 level, but then on Friday, the market punching down through this level, and as you can see, there is little underneath until the congestion in late 2019, early 2020, centered around 14,395. And I suspect today's drop and swift pull back up might be as a result of the approach to that support. Okay, so what have we done? Well, we have exited out of a late May to November rectangle pattern between 14,935 to 15,665. A pattern I mentioned 9 weeks ago and ever since. This break below the rectangle gave a primary target in the 14,540 zone, which was reached today, but still leaves a secondary, harder to reach target X1 down at 14,205, significantly below the congestion around 14,395. Will the market reach that far below? Well, if it does, I don't see it stopping there, as the next congestion below 14,395 is down at the 14,040 zone, and that is something to consider. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle times, which are currently 30.81 and 29.16 respectively. Remember those numbers. And in October and now November, the dark blue upper time helped cap the market once again. This one still will not die. Even when I thought 30 weeks ago that it finally expired, it still came back like a high-functioning zombie, influencing and impacting the market. This bullish shift pitchfork had within it two patterns, one dead and one I think is dead, but part of it may still be alive. Possibly now dead patterns, but patterns nevertheless. The first is the partially dead bright red mid-July to early October bull channel, currently 29.07 to 30.38. It captured most of the action really in October, and even then the broken bright red bull channel line started acting as a support until late last week. The part that might still be alive is the bright red lower bull channel line, and that's currently at 29.07, as this can act independently as an uptrend. So watch this space. The second pattern, now dead but having offspring, is the bright green late July to late August ascending wedge pattern, currently 30.66 to 31.45. I said 5 weeks ago how I had my doubts about the bright green ascending wedge pattern, especially the upper trend line. Nevertheless, it showed the gradual ascent of prices and how they moved from the bright red bull channel to the bright green ascending wedge pattern. And then late last week, how they punched down through it, aided by that pretty impressive, slowly, very slowly declining purple neckline extension, currently 31.09 of the September to December 2022 head and shoulders top. That is just above the dark blue upper tine, and caused the cap on the market last week and especially the week before. This break below the bright green ascending wedge pattern now gives us some potential targets below, of a primary target X down in the 29.36 zone and not too far from the dark blue middle tine, and a secondary harder to reach target X1 down in the 27.53 zone just above the dark blue lower tine, and a further tertiary much harder to reach target X2 down in the 26.93 zone. LME 3-month tin. Okay, so the big picture here continues to be focused on the major pattern of the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We're back above, if only sort of just, the dark blue middle tine, which is currently at 36.605, after spending the first part of October testing over it, then below it, and in November pushing up over it again. Indeed, November's high so far exceeds October's, if only by a bit, though neither, much like the high seen back in April at 38.395, has failed to stabilize over the June 22 high at 37.05. We're also testing once again from below the important bright red neckline extension, which is currently at 37.080, and that's of the August to November 2024 head and shoulders top, which had mid-year capped prices along with a dark blue middle tine. Within this quite large bullish shift picture, we have two other patterns in operation. One dating from July, that still works, just about, and a newer nascent October base one. They are both ascending expanding wedge patterns. The July based one is highlighted in purple. It's currently 34.925 to 39.415, whilst the newer October based one is highlighted in bright green. That's currently 36.055 to 38.055. Neither right now are under threat, but it is worth noting their current bullish nature. Thus, the pressure is still, as I said last time, on the upside, as we have higher highs and higher lows. Those are somewhat slow grind higher, and any reversion low will likely be to support these patterns.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.